Hello. Well, a number of Singapore conglomerates holding their annual general meeting have commented that for the year ahead, it's really a matter of just keeping things the way they are, continuing to develop their products and services, continuing to deliver on their execution. And ST Engineering is no different. It's also a very large conglomerate with four main business units: aerospace, electronics, land systems, and marine. They have various other businesses too, but those are the main four ones. And in the next couple of minutes, I'll take you through some of the key highlights from the annual report ahead of the annual general meeting. Of course, this does not replace you reading the annual report yourself. So please take a look at the document before you head off to the AGM. Here are some of the key highlights gleaned from the highlights page. And the company says that even though revenue and profit was up, as you can see here, in essence, the percentages belie the tough times that the company and its customers have gone through. So a 4% increase in revenue certainly doesn't sound like much, and neither does a 1% increase in profit. But then they said that sentiment through the year was cautious, if not depressed, in many of the markets that they served. So on that basis, I suppose shareholders will be thankful that they did even see an increase in both revenue and profit. Because by other metrics, there were decreases, and here are two of them. The operating cash flow was down 11% at less than $1 billion. They had more than $1 billion last year. And the dividend is also lower. They're paying out 80% of their profit, but as this next table shows, the dividend is now down to levels in 2011. The light blue bars there in that bar chart, in essence, show that the ordinary dividend has remained consistent, but then they issue a special dividend there in the dark blue bar, depending on how the economy is doing, how their customers are doing, and how much cash they need for the future. So the fact that we're now down to levels since 2011 perhaps shouldn't surprise shareholders in view of the tough economic times that we are emerging from. The outlook is a little bit better, and I promise to get to that. First, though, let's take a look at the order book, and that's also of interest. Here it is, up 10% at $13 billion, a record order book for them. Those customers, or those orders, they say, are coming from new customers, business from new markets, repeat orders, and expanded work scope from existing customers. That's a screenshot from the annual report. So the orders, in other words, coming from all manner of customers, both new and existing. What's interesting, though, is this particular comment. It's just a two-liner. We expect to deliver $4.3 billion of this order book in 2014. In other words, they're going to have to, and with revenue at more than $6 billion, they're going to deliver around $4 billion. So they're going to have to get $2 billion more orders during the current year in order to come on par with last year's revenue figure. Right? So if the existing order book is there at $4 billion, $4.3 billion to be recognized this year, well, it makes sense then that in order to reach that $6 billion figure from last year, they're going to have to send those salesmen out and make sure that they actually bring in more orders. And obviously then replenish the order book so that the order book continues to grow. And you see that in this table here, on page 53 of the annual report, you can see how the order book just continues to grow. The line in the middle there is during the financial crisis. You can see that there was a little bit of a dip, but since then the orders have picked up again. Now, let me take you through some other parts from their financial highlights. And this page in particular, which on the right-hand side now, where we look at those ring charts, because they also tell an interesting story. What this breakout shows you is the revenue by sector, and it shows very clearly that aerospace is still the top dog, followed very closely by ST Electronics. Land systems is in there, but very somewhat behind, you can see there, in third place. Now, this is particularly interesting, this chart. It hasn't changed very much compared to last year, as you can see. But then when you look at net profit by sectors, the chart changes quite dramatically. And you can see here that the ring, as it were, from aerospace is much bigger. So even though aerospace is slightly ahead of the other divisions by revenue, it is much further ahead by profitability. It's much more profitable than the other parts of the business. And keep your eye in particular there on land systems, which again lags this time in 4th place. So once again, ST Marine, which is in 4th place in terms of revenue, is actually in 3rd place in terms of profitability. Now, Land Systems, in other words, the defense arm of ST Engineering, has always lagged over the years, certainly as long as I can remember. It's a strategic part of the business because of the weapons and ammunition, including the 40mm ammunition that they're particularly proud of in the annual report. But in terms of making it, or it being one of the star performers, the star drivers of the business, well, for that, we'd really have to look at aerospace and marine. And more on that in just a few moments. Because then when we turn to this page with the world map, let's zoom in to 3 of those rings at the top, in the top right corner there. Let's look at revenue by customer type. And you can see there that defense makes up 38% of their customers. So you can see what I meant about the strategic nature of Land Systems. It might be lagging in terms of revenue and certainly in terms of profitability, but a large number of ST Engineering's customers are actually defense customers as opposed to commercial customers who make up 62%. Then this is the revenue figure by location of customers, just to kind of throw this one in. If you're reading in the newspaper or you're seeing on TV commentary about the US economy, this does really matter to ST Engineering because, as you can see on this chart, while 58% of their customers are in Asia, 26% of them, about 1 in 4, are actually from the United States. So what happens in the US does matter to us here. Now let's turn our attention to the chairman's statement, and you can see the chairman and chief executive here pictured. In particular, this is the comment when I'm looking for outlook comments, when I'm looking for forward-looking statements, this would be one of them, that they're still looking for suitable yards outside of Singapore, that is shipbuilding yards, presumably to expand their shipbuilding and ship repair business. They've recently launched in Brazil. They've also taken on additional space in Tuas here in Singapore, but they're still on the lookout for more. Perhaps there'll be more commentary about that at the annual general meeting. Also, again, when I'm looking at forward-looking statements and we turn the page to this one over here, we come across this commentary that their new airframe hangar in Guangzhou is expected to commence operations during the course of 2014. And the other forward-looking statement there is that the aircraft parting and green harvesting business in Texas should also kick in 2014. More questions that you might like to pose during the AGM. Here's another interesting one, which you might have seen in the news recently about the launch of their satellite. They're looking to launch Singapore's first commercial Earth observation satellite in the 4th quarter of 2015. So that's still some time away, but a bit of a buzz, really, isn't it, for that to happen? Singapore already has satellites in space. Barring unforeseen circumstances, this is now, I suppose, the standard line that we get from companies about some sort of quantifiable outlook. They're still expecting revenue and profit, before tax at least, to rise in the current financial year compared to the financial year that we are reporting on here. Right. Now, if you're a Chinese speaker, there's also the chairman's statement in Chinese. So if you turn to page 16, you can read that for yourself if you're interested. It's one of the few companies that I've come across, at least, that has a chairman's statement in Chinese for our Chinese investors. Now, on to some of the individual analysis by system. We've already looked in broad brushstrokes at the 4 main divisions: aerospace, electronics, land systems, and marine. Let's look at them in slightly more detail because these are also broken out here in the annual report. Let's start with aerospace. Simply, let's go in alphabetical order. And you can see the revenue and pre-tax profit charts. Even if you can't see the numbers, what's important to note is that there has been some growth. It's not huge growth, but again, given the times that we are in, it's probably about as much as we can hope for. There's also this next board. This is from the electronics page. Once again, revenue and profit outpacing last year. You could say that profit before tax outpaced the revenue growth in this term, simply because the gap between the 2 bars is that much wider. But then we come to land systems, and once again, this is what I meant about the very strategic part of the business, but again not performing as strongly as the others. And you can see that very clearly because the bars for both revenue and pre-tax profit are shorter than the bars comparatively last year. This is on page 38 of the annual report if you'd like to take a look yourself. Lastly, let's take a look at the other division, Marine, and you can see here far and away increases both in terms of revenue compared to the previous year and profit compared to the previous year. Page 42 is the one to go to if you want more information on that. And now let's go to the capital expenditure charts, because this again kind of paints that picture of how Land Systems fits into ST Engineering. You've already seen a couple of graphics now which show that Land Systems is third in terms of revenue, fourth in terms of profitability, but a large chunk, 38% of their customers, are in the defense sector. So even though Land Systems is, you could describe as the laggard, it is an important part of the business and it gets allocated a lot of resources, hence the capital expenditure chart. It's one of these circles that you'll find here on this particular page. Let's just break out the capital expenditure chart and you can see that aerospace gets the most allocation and that's then followed by electronics. But Land Systems actually outpaces Marine, even though, as we saw a few moments ago, Marine is growing very strongly in terms of revenue and profit. More things to ponder if you're going to the AGM. Now, let's quickly wrap up with a couple of points, particularly if you're into number crunching and you love to go through the back of the annual reports and look through the numbers and the notes to the account and the management discussion and so on. I'll leave you to ponder the annual report over a cup of tea somewhere. But in the meantime, let's just break out a couple of points for those of you who love to look at the numbers. This first one looks at debt, about $1.4 billion worth of debt, they say. And when you break out a part of the commentary, there's no chart for this as we see in other annual reports. But here we see the commentary saying that about 1/3 of the total borrowings, as I mentioned, $1.4 billion, is due in the next year. So that awaits the Chief Financial Officer. She's going to have to look at how that's going to be refinanced, presumably, because ST Engineering is actually in a net cash position. They have more cash than debt, as it were. 17% of the debt matures in the 2 to 5 year time frame, and half, that is the rest, in 5 years from now. It's not like they can't afford this debt. And again, looking at this particular graphic, this shows you the interest cover, the three-line the line across the three bars in this graphic going up and up. In essence, it means that they can pay their interest charges 16.8 times over. So once again, it's not like they're over their heads in debt. I think that's very clearly borne out by this particular chart with a net cash position of $856 million. Other numbers, I thought you might be interested in this for the accountants among you. This particular page, much further back in the annual report, talks about the inventory obsolescence. Now, let's bear in mind that ST Engineering had annual revenue last year of $6.6 billion. So that's a very large amount. And the number I'm about to mention is obviously significantly smaller than that. But with inventory obsolescence at $210 million, in other words, they have goods in store which are obsolete to the value of $210 million. It might be worth popping a question to ask whether this is a particularly high number. It's certainly up on last year, and also whether this is of concern to management that so much of their stock seemingly is out of date. There's also this particular page, which I found quite interesting in relation to their interest charges, and in particular interest rate swaps. Now, this is where we're getting into the financial derivatives space. But again, if you're one of those number crunchers, you might be interested to turn to this page, page 223, which points out that the group has outstanding interest rate swaps amounting to, drumroll please, $221 million, which are designated as cash flow hedges. A little bit further down, you see that there are actually outstanding interest rate swaps of $150 million, which are not designated as cash flow hedging instruments. So the reason this is interesting is not just because of the size of those numbers, but because if you look at this next page, it would appear that the interest rate swaps of 221 million, I'm not seeing that they are making a loss, but the other ones that are not related to hedging the cash flow of 150 million, my simplistic and amateur reading of the annual report suggests that actually those swaps are out of the money to the tune of $30 million. So, something for you to ponder. If you're an accounting student, you might also like to take a look and see what your perspective is. In any case, read the annual report before you head off to the annual general meeting. I'm Mark Lowdy. Thanks for watching.